Good morning, everyone. This is Anne-Marie Band for the Benzinga Pro platform, and it is September the 14th. It is a Wednesday. Midweek is a pretty important day in general. A lot of traders think that if the high or the low has already been made for the week, Wednesday is the day it will sit inside of that range. If Wednesday makes a new low or Wednesday makes a new high, then all bets are off in terms of what's going on. So what are we seeing? Well, what I want to talk to you about first is the dollar. Never mind about Upstart being here. We just want to, that's this one down here. I am watching it for a couple of things, but it's still not doing what we need it to in order to take any kind of long action on there. But what I want you to see is how important the dollar is right now in terms of its motion. As it came up into the highs, the market stopped falling and started to lift. And as it's come in to the lows, the dollar, and started bouncing, the market has dropped off. And this is very, very important for us to see. This relationship is fairly solid right now. So let's go to our regular trading mechanics and let's have a peek at what we are looking at in terms of broad motion in the SPY. And I'm going to go to a 1 so that you don't see all the noise that I have written in there. I just want you to see from a weekly perspective. This week we broke out of the high of last week, and now we are coming into the open of last week. And indeed, if we go to the intraday formations, we can see that we really are breaking down underneath this floor that we should be holding. So here's my thought. Above this line, 392, you can start thinking about picking a bottom. Below it, any bounce into above it is going to be a short. This market is very heavy. Do you see this gray down here? It tells us the breakdown of momentum, and that momentum is very negative because it's significantly under the zero line. All right, so as you're thinking about, hey, what can I do to pick a bottom, which is not entirely the right thing to do right here, but there is a shot that the price action will rotate to the north here because it is the open of the month, because traders, this was the beginning of September, because traders are thinking, wow, this has to hold. But indeed, folks, technically speaking, even if it does bounce off of this edge, it's going to bounce into resistance. We've got weakness across the board. And so if we're thinking about how do I want to play what I want, you want to think about what's the overall slope. Have I moved sideways? Or have I tested resistance and failed it? If either of those answers or both of those answers is yes, you're still in a stage where you're going to be able to sell resistance and buy support. Now here's another thing, and I want to share this with you because I got a couple of notes that I really wanted to address. One of them was, hey, there are a couple of trades that you took us into, like Netflix, where it fell really hard and you said, hang on, and it turned around and moved right back up and gave us a ton of profit. How did you know to hold? So here is what happens. When you have a move that is deep into a range, but it holds the range, that's an expectation of future motion. And so with the Netflix event, it came deeply into an edge, and I said, all right, let's just watch for that edge to hold. And if it holds, the expectation is, all right, that was just a snap. We're going to move right back to where we're supposed to. Now, in other cases, if the move is not into an expected area, but widely outside of it, for instance, yesterday I said, hey, this is the floor for those of us that talk to each other on, sorry about my voice, those of us that talk together in the stream on the Benzinga Pro platform or on any other platform that you find me, you'll notice I said, hey, listen, they are coming in and this is a likely floor. Well, it flew right through it. So what made that happen? Well, it was pure algorithmic flow. And the algorithmic flow took hold for two reasons. One, we had a hot CPI, which, folks, if we have a good CPI, a hot CPI, a good CPI, inflation is here to stay, right? It is here to stay in a different form than times past. It just is what it is, okay? So until things really break, we're going to live with inflation being what it is. So that being said, we had the bad CPI, and then the DXY absolutely started to explode to the north. And both of those sets of algorithms, the ones running the DXY and the ones running the news-based CPI, both of those hit, and we just absolutely fell right into formations that every single bounce was a sell zone. But the expectation was that it would hold this range. So have a look at what happens. All right, so here we are. I moved this to a 30-minute right here in the space. This was the area yesterday that we thought, or I thought, would be the relative floor. And so it tried to hold in the pre-market, fell straight through the bottom of the floor, and in the first 30-minute bounce, it couldn't return. And so this area said, uh-oh, we've got ourselves an unexpected move. And so for me, it sends me into, I have to think about that. Now, for those of us whose brains work faster, we would say, oh my gosh, that's an opportunity to short. And that's great if you're running by yourself. But if you're thinking about other people following along and you go, okay, this is a short, and it turns around 10 minutes later and is savagely long, because what's happened is unexpected, it's very hard to come back and go, oh, by the way, we've got to have, our charts turn around. So what I'm trying to say is, what I try to do is work on the side of expectation. And I'm thinking about, if I told someone to do this, can they follow me in a way that's not going to frustrate them? And so this is really what I'm sort of working through. And you can hear me explaining myself, but explaining myself for two reasons. One, I'm not the only right way. And so if I show you, hey, this is what goes from expected to unexpected, hey, I know what I can do here, it gives you more power as a personal trader to learn something actively rather than passively, which is what you do when you're normally listening, right? So this was a learning one. I know it turned out to be, 9 minutes or whatever, but I want to give you a reference and an understanding that right now, a number of things are occurring that feel relatively unexpected to what the broad market feels like ought to be expected. And so that means I have to sit back and reevaluate some very specific motion. In the end, because I put on all those iron condors, I suspect price action is going to be sideways. So far, though, the sideways motion has been really savage. We've had upside pressure completely collapse and bring us down into congested motion. So from a daily perspective, we're still in a sideways pattern, but we could easily break. So my brain is on high alert for, hold the phone, something's got to give, and exactly what that is, I don't know yet. And so I'm looking for the charts to tell me what the traders are thinking, and that feels a little bit veiled. Okay, so we're going to go a little bit slower than you might like. And then if things move in a fairly aggressive space, we might get a shot to take a couple of intraday trades into expiry that are going to be good for us. Today, we've got a little bit of news. We've got our oil. We've got a couple of other things down the pike. My brain is on a freeze right now, and that could give us a nice little snapback motion. But you can see there's a big battle here, and it's a very big battle to hold heavy congestion. 1, 2, 3, 4, 5, 6 days of motion. One candlestick moves through the entire range almost, and now we're trying to hold the opening of the month. Could you bottom pick here? Absolutely. You could let your stop be 392. Fact of the matter is, momentum is sitting flatly against you. So the bounces are going to be sell zones until the current formation stops giving us new lows. And so this is what we're looking at. See, low, lower low, lower low. It keeps telling us that bounces are going to find sellers. But look at this. This bounce took us all the way up into an expanded range. So these markets are tricky for quick motion. We've got to work on the edges once they confirm. I like this 393.24. If we can close a candle above here, we'll go to the top of this 30-minute and then into the congestion zones. And then, we'll turn around and look short again. All right. Forgive me for such a long video. I really did want to share some critical elements with you and answer some key questions.